It's time for the Your Personal Bank Show with Ferenc Toth, President and founder of Secure Estate Management. Take charge of your financial future with your personal bank. Now, here's Ferenc Toth.
Welcome to the Your Personal Bank Show, and I have a very exciting guest and a very interesting opportunity. As folks, you know, you've been listening to me on the show and stuff. Of course, the coronavirus has been very impactful financially to small businesses in particular. It's been really getting hit. Of course, there was the government loan programs that have gone out, but unfortunately, they've already dried up. We don't know what's going to happen going forward. And sadly, a lot of the small businesses that really needed the money did not get in. You know, they just didn't get anything. And it went to a lot of, let's just say, more connected, larger businesses. It seems like the more and more we look into this. So we have an initiative, a local initiative that I wanted to bring to your attention. It's an organization called Local First. We have their executive director with us on, Thomas Barr. Thomas, welcome to the show.
Thank you so much. Happy to be here.
Yeah, I invited Thomas on because I've had some experience with Local First. And you mind sharing with us, what does Local First do?
Yeah, Local First Arizona is a statewide organization that advocates for a strong and resilient local economy through building opportunities for locally owned businesses. So we believe and champion locally owned businesses in our state. We know that more dollar stays in our community when you spend it with a local business. And so given the current times, we are doing everything we possibly can to make sure that we provide resources and support to the businesses that need it the most, all the small businesses throughout the state and in our communities.
Well, Thomas, that's awesome. And, you know, keeping, like you said, keeping the dollars in the local community makes a big difference. You also mentioned an initiative you're doing. It's called the Small Business Relief Fund, I believe. Can you tell us about that?
Yes, absolutely. So in response to the COVID-19 pandemic and seeing the types of opportunities that were going to become available through the federal government for businesses and through some of our state and local governments, we knew that there would be an area of businesses and business owners that would need more direct and more quickly responded support through cash assistance for their businesses before dollars came through. So we launched the Local First Arizona Small Business Relief Fund. This is a small fund that gives out micro grants to our smallest and most vulnerable of businesses in Arizona. So we launched that around 3 weeks ago in early April, and we're able to run about $750,000 that we're able to raise that is being put in the hands of very small businesses. So in those last 3 weeks, we've received over 3,000 applications from small businesses across the state. And we've been able to support businesses who have less than 3 employees, rely on their business as their sole source of income. Many of them have children under 18 at home and have not been able to really even plot out the next 1, 2, or 3 weeks of how they're going to, you know, put food on the table for their families and things like that. Right. So yeah, there's a high need for support for those businesses.
For the most part, got over with all grants and loans that have been thrown out there recently. So
yes,
yeah. So, you know, you mentioned, I think you said you raised about $750,000 in the last 3 weeks or so. How much of that has been funded to the businesses already?
Yeah, so we've been able to fund and distribute around $500,000 already into the community. We're still looking at how we can continue to raise funds and have been connecting each day with the businesses that have applied.
And what are the criteria for a business to apply or to qualify for this grant? And it's a grant, correct?
Yes, it is a grant. So it is not a loan. It's nothing the businesses have to pay back, and there's no strings attached. So there's no requirements for how they would need to use the dollars. And we are also connecting all of the businesses to additional resources and support that they may need right now. And so
I was going to say, how do you determine which businesses would be best qualified for this?
Well, the eligibility requirements include that the business must have less than 3 employees and rely on their business as their sole source of income. And then we're prioritizing businesses with children at home under the age of 18.
Ah, okay. And is there like some oversight involved with this? If somebody was to donate to this, how does all that work? How much goes to the business owners?
Absolutely. So there are committees in central Arizona, southern Arizona, and northern Arizona that are reviewing the applications that are coming in so that we can ensure that there is regional knowledge and intuition being put into the thought process behind how we are scoring businesses that apply. And so through that process, these committees are looking at the applications and making sure that they meet the eligibility requirements and reading through the narratives that the businesses are submitting to see about the need. And then after that, we are able to confirm the information and then communicate with the business whether or not they've been able to be funded.
Outstanding. And like I said, of the funds that are being donated, how much would, somebody's going to give to this? Hey, folks, we want to help out our local small businesses, right? So how much of the money do you think if somebody was going to give to this, we'd be able to eventually get out to these small businesses that need it the most?
Yeah, absolutely. So we are granting $1,500 to $2,500 loans right now, grants right now to the businesses. Okay. So as much as you would be able to donate to the fund, it would be going directly into those types of grants that are being given out.
Outstanding. So if somebody was interested in donating to this fund, where would they contact you?
They can just go to localfirstaz.com. They will see the exact page for our COVID-19 resources and can give to the fund right there.
Excellent. Well, Thomas, thank you for joining us. And folks, I really want to encourage you to look into this, help out our local small businesses. I'm going to have Thomas join us, give us some more updates, probably weekly, and we're going to see this thing through and help our small business community through this crisis. So, Thomas, thank you again for joining us.
Yes, thank you very much.
And I've been an entrepreneur myself. It's going to be 30 years pretty soon. You just get a feel for what's going on out there, if you know what I'm trying to say. And so when I saw this article and I said, this time it feels different. At that point, by the way, again, to put things in perspective, the stock market had dropped 5 days in a row. And other than that, there wasn't a whole lot of other things going on. But I was already starting to see some differences in some of the people that I was talking to and their reactions and whatnot. And I talked to some of my cohorts, some of my mentors, and they were feeling the same way. So March 3rd, that was a Friday. By the way, this article came out late Friday afternoon, February 28th. So not a lot of people paid attention to it. It was one of those, oh, by the ways. But I happened to see it. I'm kind of I guess a little bit of a nerd in that way. Like I keep up on these kinds of things. And by Monday, over the weekend, I talked to some of my buddies, like I said, and got some of the same feel and started sharing this information with our clients and then on the radio beginning of March. Now, the initial, this is going to be important to understand. The initial response or reaction was, I got a lot of pushback from a lot of people. I had folks saying, the market's been great for 10 years. You're talking about the market's only gone down 1 week. I said, I understand that. But again, it's too early to tell. I remember saying that all the time. But something about this feels different. It doesn't feel right. And it's not like a normal market correction type of thing. And as things progressed along, it's become more and more obvious that this definitely is more significant than a typical cycle. A typical downturn. We're looking at historic numbers and unemployment and GDP loss and things like that. So my point is, and of course, this happened so quickly that the pushback didn't last long. I mean, in a matter of weeks, even folks who had previously were pushing back to me, saying, "Oh no, you're kind of being an alarmist. There's nothing. It's not. This is no big deal." Within a couple of weeks, typically, we're calling me back or reaching back out to me and say, "You were right. And what can we do?" So what I want you to understand is I'm starting to see some things. The worst may be over, particularly on the medical front. There is some positive news now that's been coming out recently that maybe some of these places we've hit the plateau. The total number of cases and the total number of deaths, particularly, appear they're going to be much lower than projections were before. But here's the thing to understand. This cascade of bad news is causing people to, where they were, in my opinion, early March, underreacting to the risk of what was going to happen. Of course, that's human nature. We get used to, we get settled in, we get used to it. I get it. I understand. I didn't argue with those people too much. I said, well, we just agree to disagree, and I guess we'll find out soon enough, won't we? Who's right? The bottom line is, what I want to do is in the next segment, stay tuned. I'm going to talk about what to do to weather this economic storm and come out on the other side being in a great position to take advantage of opportunities. Stay tuned.
For more information on your personal bank, call Ference at 866-515-6280 or online at yourpersonalbank.com. Back to Your Personal Bank Show with President and Founder of Secure Estate Management, Ference Toth.
Welcome back to the Your Personal Bank Show. In the last segment, I was talking a lot about perspective in terms of how this coronavirus is affecting all of us just about. And then, of course, how it's going to affect our money. And the thing is, the perspective I want you to understand is, if you listen to the show, like I said in the first segment, the last couple of weeks, I was sharing some pretty dire economic news. And part of it was, I was sharing that because it was like ring. I felt like Paul Revere ringing the alarm bell. Hey, the British are coming. The British are coming. And at first, when I first started sharing it, of course, I was getting a lot of pushback. It's not that bad. It's going to be a short term, and like I said, going back to this article, this Washington Post article, it was written on February 28th. It was on a Friday afternoon of all times. And like I said, the title of the article was, stock markets tumble. This time feels different. And like I said, something about it in my gut as an entrepreneur, talking to people around the country. I had some perspective from some clients in places like Seattle that got hit first. And I was seeing some of those things maybe before many people. And as an entrepreneur, small business owners, we tend to have a closer pulse to the economy and what's going on than most, because we're dealing with folks on a regular daily basis, with whatever product or service we're dealing with. And we get that, we get that feel, if you know what I'm saying. So my point is, I had some people pushing back saying, hey, it's not going to be that bad, or, it's going to be a quick recovery, or all these other things, which I guess it still could be. But clearly last month or so, with cascading bad news, economic news, more and more people have come to realize this is serious, and it's going to have some serious impacts, and probably some long-term impacts, particularly financially. The medical impact probably is going to be less so. And this is where some of the good news is. And I think my perspective, like I said, is my feeling is, with this cascade of bad news, the pendulum is starting to shift too far to the other side, where, it's just one after another can get depressing, frankly. And there's even talk about, we're going into depression and things like that. Personally, I don't believe that. I don't believe that it's going to be that bad for a lot of reasons. We have safety nets in place. FDIC is a good example of that, where we don't have, we have those safety nets where people aren't going to lose all their money in the bank, for example, because of FDIC. And there's many other things that are in place as safety nets. And of course, the Federal Reserve and the government has come out with way more proactive, way quicker responses to help mitigate the worst of it. And, is it still impactful? No question. I don't think that's an argument today, but it helps. Okay. And the responses help. And the other part is, our medical science is, in terms of this is a medical issue, medical science is much more advanced than it used to be for previous, pandemics, things like that. We should be able to get through some things quicker. There's some positive news on that front from the medical front. There's some areas that are looking like they're, get past the curve or plateauing and things like that. And the estimates have gone down quite a bit, as far as like number of deaths and things, which is great news. Also, something that's happened, and I'm proud of our country and really people worldwide, is, the social distancing measures have been effective. And for the most part, people have abided by those. We, in essence, as we voluntarily as a country have, for the good of the group, step back and, close businesses and stayed apart and done all these things we've done so that the more vulnerable of us around us don't get the virus and potentially have very serious medical issues as a result. And so the thing is, the medical results, the medical impact could be bad, but looks like it's not going to be as bad as maybe initially thought. And that's great news. And, there's talk about Dr. Fassini talking about, schools can open again in the fall. They're starting to have discussions about the middle game now. The early game was, hey, we just got to stop this thing from spreading and overwhelming our medical staff and our medical capacity. Now we're starting to think about the middle game in terms of how we're going to reopen and what restrictions or rules will be in place, those kinds of things. But here's where I'm not as positive. There has been serious economic damage done already with unemployment, small businesses that most likely jobs that won't be there and businesses that won't be there after this is over. And those are going to have longer term repercussions, as in most any other recession has ever had. And I think it's fair. It's not official, but I think it's fair with the numbers, the historical numbers we've been seeing. We can call this a recession. And the thing is, how is that going to impact your money? How is that going to impact your retirement? Well, when you're looking at financial advice, and I talked about this more in depth, I did a webinar a couple weeks ago. It's on yourpersonalbank.com. It's current economic news, but I really talked about the 3-bucket strategy in there, how to survive this recession and come out on the other side in a better position to take advantage of the opportunities that are going to happen. Because again, in a economic recession, things are cheaper in general. There's discounts, there's opportunities, there's things that can be taken advantage of after the dust clears, if you will. The thing is, though, is when you're listening to financial advice, and there's a lot of it out there, particularly now, you've got to really understand what is this advice geared towards. And here's what I mean by it. The 3-bucket strategy is really quite simple. It's been used for a long time. A lot of people abide by this, and it's a very effective way to manage your money. And it really comes down to, you have an emergency bucket. Most all of us have heard of that. That's your short term. Most financial experts say you should have 6 to 12 months of financial liquid assets, funds available for an emergency. That's if the car breaks down or the air conditioning unit goes out or some unexpected medical expense occurs. Any life stuff happens, right? By having that liquid reserve available just in case, that mitigates a lot of financial stress and a lot of financial problems. The folks that live paycheck to paycheck, when you really talk to them, they're living a very stressful existence. By having that cash reserve, by building that reserve right there, you've dramatically reduced your stress. I mean, let's face it, just in the last couple months here, there's a lot of folks who had jobs, who thought they were secure and had a secure income, happened to be in an industry that got affected by coronavirus, particularly travel, restaurant, those kinds of industries dramatically got affected. And they may not have jobs today as a result. And they would have swore they might have been higher up in the ladder, if you know what I mean. So having that emergency just for those unexpected things like this is just key. The second bucket is your cash flow bucket. That's your midterm bucket. Typically, most folks talk about that as monies that you're going to need in the next 1 to 3 or 1 to 5 years, depending on who you're talking to, and depending on your economic situation, of course. And this is monies that you want to have the ability to earn interest, to grow. You can rely on. They're consistent, considered safer monies. They're about cash flow. They're about generating income or cash flow. And that's important because the third bucket is the growth bucket. Now, that's the one, interestingly, where the vast majority of attention is paid to. It's exciting. It's sexy to grow a nest egg, no question. But during times like this, where the economy is down, the markets are down, various things are unpredictable, you can't count on your growth bucket because, they have a higher risk. They're involved. That can be a business. It can be all kinds of different things, cryptocurrencies, you name it. Those are designed for longer term risk. And we all hear this all the time. Invest for the long term. Don't plan to touch it for 5 or 10 or 15 years even. The longer the better. because they have the potential to grow, but of course they have the potential of risk, the downturns when we have a downturn like we're experiencing. And that's where the middle bucket, the cash flow bucket, comes into play so strong. Now, there's people that focus on the growth side. There's a lot of advice out there. I don't hear a whole lot about the cash flow bucket. It's almost like an afterthought. That's what we specialize in, focus on. We're going to talk about this in the next segment, more about how to maximize your cash flow bucket and survive this financial crisis, because that's going to also then give you the ability of taking advantage of opportunities that can make your growth strategies succeed even more after this is all over, after the dust clears, if you will. So stay tuned. We're going to talk more about that in the next segment.
For more information on your personal bank, call Ference at 866-515-6280 or online at yourpersonalbank.com. Back to Your Personal Bank Show with President and Founder of Secure Estate Management, Ference Toth.
Welcome back to the Your Personal Bank Show. We've been talking a lot about the economy, the coronavirus, and all the impacts it's having. And it's significant. And let's face it, if you're paying attention to the news these days, almost universally bad. I call it a cascade of bad news. The thing is, to put things in perspective, and if you heard my show last couple of weeks, I was sharing some dire economic news. I felt like at the time when I was sharing that, not everybody was paying close enough attention to the potential of what was going to happen. And it really started for me. I have mentioned this article now previously, Washington Post article. This time it feels different. It was written in February 28th, Friday afternoon, and it was after the markets had gone down for the 7th straight day, actually, as the article states. And like I said, as an entrepreneur, as a small business owner, I read this, and this one struck a chord. Talked to some of my buddies, my mentors, and they frankly felt the same way. Most of America didn't. And I started sharing this Monday the 3rd, March 3rd, actually, this information with clients and then on the radio. Got a lot of pushback initially. Obviously not so much after a while, very quickly, within a matter of weeks. Things that talking about in this article, and they quoted Chairman Powell, Federal Reserve Chair Powell. That's gone beyond what even this article was predicting is potentially a problem. They were talking about potentially like another Great Recession. The thing is, that's human nature. When things change fast, like I said, it's hard to adjust. It's hard. It's just human nature. We get comfortable, in where we're at. And when things change so quickly, it's hard to adjust. It's like the 5 stages of grief. The first stage is shock or disbelief, right? Now, what I'm seeing though is I want to start, maybe even one of the early ones, start to say, look, there's a lot of bad news. There's going to be more. I'm certain of that because, we're going to get, earnings reports and things like that. They're going to be terrible because, businesses are shut down with all these, restrictions and stuff, stay at home and all, which is doing good for the medical results, which is where the positive news is. And there's some positive news in that realm that the worst might be over. We're getting close to the curve, the top of the curve, or even starting to flatten the curve. And the total number of cases may not be what they originally thought. And that's also great news. The problem is, here's where I'm not so positive, and it's this. The economic damage that's already been done is significant. Again, there's a lot of small businesses that are not going to come back. There's a lot of jobs that were lost that won't be there. These are going to have longer. Now, there's going to be companies, there's going to be industries, there's going to be folks that are going to do well through this. I mean, if you think about staples and things like that, things that we need like food, I mean, those obviously are going to continue. But my point is there's going to be overall in general some real long-term, effects to this. Okay. Most likely. And how's it going to affect your money? Well, again, when it comes to money advice, I shared this in the webinar. Go to yourpersonalbank.com, more in depth about the 3-bucket strategy. It's right on the top homepage. You'll see it. Just click there, listen to the webinar. It goes more in depth. I'm going to touch on it here. And when you get advice, and again, there's a lot of it out there, you've got to understand which bucket is this advice applying to. In other words, you have an emergency bucket. That's your short-term emergency. The recommendations are typically 6 to 12 months of not cash, but liquid assets, easily accessible, safe for emergencies. That's what that's about. And if you don't have that, of course, that creates a lot of financial stress. So if your best financial advice I can probably give someone when I sit down and talk to them, if they don't have an emergency reserve, first step you need to do is build that. Okay. And there's a lot of things you can do, increasing income, reducing expenses, reallocating various things, whatever, but have that emergency reserve. I don't think anybody's going to disagree with that, because again, life happens, and this last coronavirus thing, of course, illustrates that. You got to have those emergency cash reserves to weather the bumps in life. Okay. The cash flow bucket, the mid-range bucket, that's your bucket that generates income, cash flow you can rely on during tough times. Folks talk about 1 to 3, 1 to 5 year time frame. You should be able to rely on that if you need to. That's what it's about. And then there's the growth bucket. That's where your growth, things like equities and businesses and real estate, a lot of real estate investments, various things can fit into that growth bucket, cryptocurrencies. The thing is, during a recession or a downturn, you can't count on the growth side because usually those lose value. That's where they have the risk. They have the growth potential. They also have the risk potential. By the way, I think we all know most of the media's attention, because I guess it's fun, it's sexy, it's exciting, is on that growth bucket. Very little attention, very little is talked about in that mid-range or cash flow bucket, which is what we focus on and becomes critically important during these times of crisis. My point is simple. Which bucket are they talking about? And modern portfolio theory talks about this all the time. Most of us have heard that you should have the rule of thumb is 60-40, 60% growth, 40% in what they call bonds or bond-like equivalents. Those are your cash flow or your, interest type bearing, if you will, accounts. Now that ratio can be different. If you're nearing retirement, the general advice is 50-50. If you're nearing or in retirement, if you're younger, it could be 70-30. Your situation could vary from that. But my point is a chunk should be in that cash flow side to rely on those downtimes like now. The problem is, and I talk about this more in the webinar on yourpersonalbank.com, is with the extremely low interest rate environment we've had, where do you go to put some money to actually earn a halfway decent interest rate of return? And that's a real problem. I mean, we all know today cash doesn't pay any interest to speak of. Most bank accounts, things like CDs, money markets, and all those kinds of things are very low, historically low levels too. It's tough to get any kind of return on a bank. And I'm the chairman of the board of a bank in formation, very familiar with all that. With the low interest rate environments, banks are not able to offer much in the way of interest on bank investments. So the other part is, of course, bonds have been affected by the interest rate environment, and a lot of them are paying low rates, and it's tough to find a return with the safety built in. You want to have something in that cash flow bucket that's non-correlated to the markets. I mean, if your growth bucket has been hit because of what's gone on with coronavirus, for example, you don't want your cash flow bucket hit also. I mean, that's what you got to rely on while you wait for the growth bucket to recover. Okay? That's the general advice that's out there all the time. Where can you go to get some decent rate of return and have some guarantees? Some annuities have some of those kinds of things in place, particularly the guaranteed lifetime income riders. There's some out there today that are offering 7% roll up. Now, that's not cash. That's money you can have available to access like a monthly income for life. Okay. So, but it can create a guaranteed cash flow, which again would fit in that cash flow bucket. And if that's of interest, we can help you find some of the best products and tools out there for that. We're independent, so we can work with anybody. So whoever's got a good tool, financial tool with a good company, and they're still available out there, I mean, that's not a bad option if you want to set something up where you can supplement, say, retirement and have a guaranteed income for life. That's a good tool. Your personal bank, I'm a big fan of. That's what this show's about, because there's guarantees. There's 4% contractual guarantee, and their current rates are 5%. There's some cost of insurance and things involved in there, of course, but the bottom line is that's a pretty darn good rate these days, given what's going on, right? And there's access, liquidity to the money, a good chunk of it, well over half in most cases, sometimes upwards of 80%, depending on how we structure it. And that can put some money in that safe bucket that can generate cash flow if you need it through this period, or just let it roll. And then when the dust clears, that money is there, is still there. It didn't ride the roller coaster, if you know what I'm trying to say, losing values and then having to retrace and gain back. It stayed steady. In fact, it's steady, and the steady Eddie, if you will, and it grew. And then when the dust clears, when the dust settles, opportunities galore should be available. Many things will be discounted depending on how long this economic crisis lasts, and you'll be in a position then to be able to take advantage of those opportunities instead of riding the roller coaster all the way down and then again having to come back up and ride it back up. Why not get off the roller coaster, at least with some of the monies, and then allocate those monies when the opportunities present themselves? We're going to talk about that more in the next segment, so stay tuned.
For more information on your personal bank, call Ference at 866-515-6280 or online at yourpersonalbank.com. Back to Your Personal Bank Show with President and Founder of Secure Estate Management, Ference Toth.
Welcome back to the Your Personal Bank Show. We're round and third, and someday maybe they'll start playing baseball again. Anyway, I want to just kind of reiterate real quickly. The economic news is tough. We're having a cascade of bad news. It's probably going to continue for a while because the impacts, even though the medical situation seems like there's some good news on that front, so some glimmer of good hope, if you will, that this may be over, and relatively soon the number of deaths and things like that appear going to be less than were originally projected because the social distancing measures have been effective, and that's all great news. The problem we're facing is real simple, is the economic devastation that's already occurred is going to be impactful, particularly in the case of a lot of small businesses and folks who had jobs there that no longer exist. And so the reality is the economic impact often is more damaging than the cause. And the more we look at this, the more likely, in my opinion, that's going to be. So how do you address that? How do you go through it? Well, again, like I said, the 3-bucket principle is probably the best thing I can give you right now in terms of thinking about managing your money. I talk about it, like I said, the other segments. But if you want to go, I go into more depth about it in my webinar I did recently on yourpersonalbank.com. Right on the homepage, you can click on it for free. It's the current economic news webinar. And then, of course, the news is even worse since I was sharing that. But the reality is, I talk a lot about that 3-bucket strategy, and that's the emergency bucket, the cash flow bucket, and the growth bucket. It's really a great way to think about your money, manage your money, and when you're listening to advice, when somebody's giving advice, perfect example, we hear about, hang in there or buy on the dips or these various things. A lot of times the advice that's given out there is based on the growth bucket, and that's all well and good. The thing is, during a recession or a downturn, you can't count on the growth bucket because those are the assets that typically are affected. They have potential for growth, but also have the risk for loss. It's that cash flow, that interest-bearing bucket, that middle ground that financial advisors talk about, the 1 to 3 or 1 to 5 year period. This is money you can count on during those economic downturns. This is the difference. This is the difference maker in terms of surviving or an economic crisis or a recession. And I was talking to a gentleman the other day, nearing retirement, looking at retiring in a year. Liked the idea, listened to the radio show, sharing the 3 buckets, made sense. He wanted to move some of the money to the personal bank because he liked the safety and the consistency, money growing steady, liked some of the tax favor benefits. All that was great. And he got back with me and he says he looked at his accounts and he was 100% in growth funds. Here's a person a year away from retirement, and as he stated to me, it looks like I'm going to have to work longer because at that point, his accounts had lost about 30%. The modern portfolio theory talks about 60-40 as a rule of thumb. That can vary folks nearing retirement, that talks about 50-50. If you're younger, maybe 70-30, depends on the person. The point is this. It's that second bucket, the middle bucket, that is not talked about as much. The media doesn't talk about it hardly at all. It's hard to find an article, a discussion about it. And when I do, I get excited because, again, it's not talked about a lot. And that's the one that you have to have in case of downturn. Now, by the way, downturns can also apply to an individual, not just the economy. Life happens. We get surprises. We get loss of income. We get disabilities. We get businesses and jobs go down. We get unexpected medical expenses. That middle bucket is about surviving those things. It's having income or interest or growth on the money consistently with some safety that's there. So you don't have to tap the growth assets if and when they're in the midst of a downturn. There's nothing worse than having to access money that from a growth bucket when it's lost value. Again, what could that be? It could be a cryptocurrency. It could be an equities. It could be a business. It could be real estate. A lot of things can fit in that growth bucket. But when it's on a down and you have a medical emergency or an economic crisis and you need the money, that's the worst time in the world to take it. When you have funds in that cash flow, that interest-bearing middle bucket to access, that's steady, consistent, it can mitigate that. It's about discipline. And as I've said this before, when the markets are going up, the economy's good and everything, and you're heavily focused into the growth side, great. It works. You can get sloppy, if you will. The discipline can be sloppy and it can work. It's when these things happen, and this was quick. This was a surprise for most people. It happened fast. As I stated in the previous segments, I started sharing this literally March 3rd. I read that article. This time feels different. I got a lot of that was written in February 28th. Got a lot of pushback initially. I had people arguing with me, and we disagreed. And I said, well, we'll just see, won't we? And I'm sad to say I was right. I didn't want to be right. I'm an optimistic person. But the thing is, if you want to look at how to survive this economic crisis, this financial crisis, in the best way possible, contact us. Over 90% of my client meetings last year, I'm talking about in 2019, were by GoToMeeting or by the phone. I mentioned several times, I've spoke around the country for the last 5 or 6 years at investor groups. Most of my clients live out of state. I'm in Phoenix, but most of my clients live out of state. So we meet by GoToMeeting. My business hasn't changed much and how I operate. So in that regard, I was fortunate. 3 years ago, I started working from home primarily, still have an office to meet occasionally. But the bottom line is to meet by GoToMeeting and go over this, explain, educate clients and doing webinars. I've been doing that for years. So in some respects, in those respects, I was ahead of the curve, not knowing how beneficial that frankly is. So if you want to really look at this, reach out to us. Contact us at yourpersonalbank.com. There's not a lot of media attention and focus to that middle bucket. Okay, let's talk about that. Let's see how we can maximize that, get through this crisis. But not only that, the results, the experience people are going to have looking back on this economic crisis, recession, whatever it ends up being, is going to be really based on the middle bucket, the cash flow bucket. If their cash flow, their income, interest income, whatever it is consistent or doesn't fluctuate a lot, they're going to sail through this without a whole lot of issues. It's going to be bad, but personally, their financial situations aren't going to be a whole lot different. It's the people that didn't have enough of that cash flow or lost what they had are going to be affected dramatically. That's the difference of the experience of a recession, of whether you survive it or not. But there's a second piece of this, is why that middle cash flow interest bucket is so important. It's the one that has money that doesn't fluctuate in value. It doesn't lose value when the growth assets lose value. What does that mean? Well, at some point or another, this is going to be over. We will survive this. This too shall pass. Okay, just like every other economic event we've experienced in a country. This will be over. And do you want to be in the position where, well, now you've got most of your portfolio and growth assets, and now you got to retrace and make back what was lost? Or would you like to have a portion of that money available, didn't lose its value, still fully there, available, and you see opportunities? Because certainly after economic downturns and recessions, there are many opportunities that present themselves. It's very common. A lot of things are discounted. You could take advantage of those discounted assets at that point. And if you have a fully funded cash flow bucket, your personal bank is a great tool for that. There are others. Be happy to share those with you. Contact us at yourpersonalbank.com. Let us show you how to thrive through this recession and then really take advantage of the opportunities when they present themselves when this is all over. Stay safe, stay healthy, and we'll talk to you and we'll look forward to seeing you next week.
Listen next week at noon for more information on Your Personal Bank. Contact Ference at 866-515-6280 or online at yourpersonalbank.com.
This show is designed to provide accurate and authoritative information. The presenter and guests on this program do not engage in rendering legal, accounting, or tax advice. Expert advice from a professional involving your specific situation should be sought, if required. Permanent life insurance is a long-term investment. Products, optional features, and riders may have limitations, restrictions, and additional charges and may not be available in all states. Withdrawals beyond principal may be taxable income. Excessive and unpaid loans may cause the policy to lapse. If a policy lapses, unpaid loans are treated as distributions for tax purposes. Replacements may not be suitable for everyone. There may be penalties and surrender charges when replacing coverage. New products may include new surrender charges and contestability period. Policy guarantees are based upon the claims-paying ability of issuing insurance company and do not apply to the investment performance or assets in the underlying variable portfolios. The life insurance and annuity products in this presentation are not FDIC insured, may lose value, and are not bank guaranteed.